Saettele here. It is December 8th, 2021, and this is the Forex Power Hour. We, of course, also dive into some cryptos, especially of late. Interesting, obviously, what's going on in that space. And we'll look at some commodities as well and indices from time to time. All right, so let's start out with the dollar index. This is DXY. We'll look at US dollar as well, the Dow Jones FXCM index. But DXY, same place we looked at last week, right? Underside of that trend line that goes all the way back to 2011, 10 plus years, and we reversed off of it. I guess that was on the 24th of November. So I guess that was the day before Thanksgiving, I think. Anyway, I am of the mind and have been of the mind that we've been topping in, that we've now got a top in place, and I am not sharing my screen right now, so I should probably do that. Hold on here. Let's see. Here we go. All right, here we go. Sorry about that. All right, so dollar index. We are, again, as noted, we have topped the day before Thanksgiving at this 10 plus here trend line, former support line, right? Remember, we consolidated around this and then finally found resistance at it in November 2020 before the final leg down, right? So again, we are looking lower from here. How low? Tough to say. The obvious level is where I have my cursor here, which is like 94.70s. That's kind of where I'm looking towards over the next couple weeks to months, what have you. Not sure how quick a market's going to be, although December does tend to be volatile. So let's go to US dollar, and I'm going to go to an hourly chart here. All right, so as I sit here and do this webinar, we are finally perhaps getting a signal, an actual trigger, if you will, that the dollar is indeed headed lower. And I like to look at this one, again, because it's a little more broad-based. It's a quarter each of yen, Aussie, pound, and euro. And so you get like a bit more of a broad perspective on what's going on with the dollar rather than just kind of the inverse of euro, right? DXY is very Euro-centric, Europe-centric, I should say, as well, with SEK in there and pound. So yes, we are getting this trigger, if you will, today. So hopefully we close down here or lower on the day would be the all systems go for short the buck, in my opinion. All right, so then let's move to the individual crosses. Euro, again, always good to get perspective. This blue line that you see here, right, that's the trend line from the 2014, 2018 highs, was support again back in November 2020. And then if I zoom into like a 4-hour chart, kind of see the basing action that we've had, right, on this line, little dip below it around Thanksgiving, but looking higher. So nothing's changed here, folks, right? Still looking higher. A bit more detail in terms of levels. 2 legs up gets you 1440, right? And that would be in line with this little low here. But really the target level that we're looking for is like 1520, 1550. Former support, 1618 up, right? Where the rally from the low would consist of, or subdivide by 1.618. And of course, simple trend line from the highs back in June, okay? So again, looking higher towards that that 1520, 1550 level. Okay. Cable's a different story here. I don't know what's going on with this thing, right? It's just a sinking ship, it seems. But we have hit a spot. I mean, we hit a spot last week as well. You can see the channel. Okay, that's fine. But also horizontal levels. March 2020 high just before the COVID plunge, that's 132. 38.2 retrace of the entire rally from March 2020, also in the vicinity, right? And then finally, if we look at this December 2020 low, right, that's going to be 31.34. We haven't hit that. Today's low is actually right on that 38.2. So I don't know, it's a level, and just, looking at dollar indices and other dollar crosses, would think this tries to work higher. No trade there for me yet. In order for there to be a trade, you need more than just a level, right? I need a signal, and this trend has been relentlessly down. So if we had, a bigger reversal day or something today, then maybe I would, consider investigating along, zooming in for entry or something. But as of right now, all I can say is that we got a level, and we are responding to it today. 38.2 retrace, so maybe there's something there, but it's just a guess at this point, right? All right, let's go to dollar yen, actually. All right, so in last week's webinar, we looked at some of the bigger reversals on yen that we've had on a weekly basis, right? And we had one of those 2 weeks ago. So again, with the 115.50 level that we topped at, which, if you forget, I will bring up this longer term chart. That is also, here's a weekly chart. 1550 is the 618 of the entire drop from 2015 to 2016. Okay, it's a big spot. So zooming in, so my inclination here is the short side, but it's got to be the right level, because you get caught in one of those, kind of drifting higher dollar yen when you're short, and it feels like you're pushing a balloon underwater. It's kind of like that with the risk assets in general. But if there is a play here, it could be from this level, 114, former resistance, but I'm thinking more like 114.40, which is the 618 of this drop. You've also got the underside of a trend line, right, which you can see crosses a bunch of pivots back to September. Okay, so my focus is that 1440 level for resistance. Anything above there, and I'm kind of clueless on dollar yen, and I wouldn't really mess with it too much. We will look at some yen crosses here in a little bit, which might help, navigate dollar yen in general, or risk in general, and Aussie yen in particular. But for that, let's go to Aussie dollar. Okay, so low on Friday was 69.90. That is 1 pip above the November 2020 low. That's a level we were looking for a bounce. We're getting that bounce. We're currently 71.60, so we are really close to what I would consider resistance until proven otherwise, until it breaks. And that's just this low here, okay? September 30th low, 71.70, right? Resistance back on November 30th and December 1st, 71.70. So would be looking for a pullback of sorts and more of a base to work higher from, if indeed we have put in a bigger low, all right? So again, careful right here, near-term basis. And you can see just on a short-term Elliott basis, I'm not going to get, real nitty-gritty with it, but just the simple kind of 1, 2, 3, 4, 5, kind of have that 5-wave impulsive look, right? You don't have to try to count it or anything. It's there, which would suggest to me that combined with the level would be looking for, again, a bit of a pause in this rip higher, but would be looking to get constructive, probably down. I wrote last night in my piece 70.60, but you might be looking more like 71-ish, right? You can see all the, reactions around that level back to November 30th. So 71 might be a spot to pay attention to. All right, let's go to Kiwi. Similar spot, not as constructive in my view as Kiwi. And if you look at, say, Aussie Kiwi, you could kind of tell that. Aussie's been much more interesting off the lows this week than Kiwi has. And also, we did hit a level in Kiwi. You can see that December 2019 high. But there's a better spot a little bit lower, and it's like 67. And that's the 38.2 retrace of the rally for March 2020. And also, you can see this red dashed line, and it's in line with this low. Let's call it 68.60. To me, that's a dividing line. I don't want to be long if I'm below that, right? You can see why. So it was support, right, in August. It was support again in September, and then we tagged it back last week, and we immediately sold off. So I'd be looking for that to provide resistance. Now if we get above it, great. Another thing to consider, and again, this is just kind of thinking out loud. It's not a prediction or anything like that, but a lot of times it turns in Aussie and Kiwi. You'll get non-confirmation, right? What I mean by that is in this case, you would have, say, Kiwi, which has been lagging on the rally. You could get maybe a new low in Kiwi, right? But it would not be attended by a new low in Aussie. That would be a non-confirmation. It's kind of like Dow theory for commodity currencies. So that's just something to keep in mind as we move into the end of the year. All right, dollar CAD. This, I actually just closed out a dollar CAD this short this morning. We had a nice trigger here a couple days ago on the break of this little short-term trend line, and we are in bounce territory. 2600, 2640 was our bounce territory level. You can see we're getting a nice little 4-hour reversal bar here with BOC triggering that this morning. Irrespective, the levels are the levels and we are reacting. So from here, 2710, 2750, that's going to be your sweet spot for resistance in dollar CAD if we get it. Okay, that's what I'm thinking. Bigger picture, I'm not too sure on dollar CAD, to be quite honest. I could envision something like 2 legs up from this low in May, and that would get you 32.30. Again, that doesn't jibe at all with US dollar weakness, but maybe I'm completely wrong there, or maybe CAD's an outlier. I don't know. Either way, near-term basis, tactically for me, I'm looking at 27 plus, let's call it 2710, 2750 for possible resistance. Okay. All right. So we looked at our commodity currencies, yen, the majors. Let's check out some of the minors, if you will. Let's go, because there are some really great charts out there. Dollar Swedish krona. Beautiful. Remember this fork here, even though we did not do anything over here, we nailed that median line on the highs, as well as the high from September 2020. This is bearish to me, little double top action potentially, and simply looking towards these former highs, right? Former resistance, look for support down here, and that's a good ways away. I like the look here, and kind of to me, it confirms or gives me a little more confidence, if you will, in the constructive euro dollar bias. Dollar NOK is absolutely falling out of bed today. I had an order to short dollar NOK overnight. It did not get hit. It was a little higher, and we just all day it's been straight down, I think literally every hour. Anyway, little false break here, trap right through the right through those highs from July and August. I got some questions coming in. I will get to them. They are crypto questions, so I plan on looking at crypto after this FX stuff, so we'll get there. Anyway, we are coming into a level where we could bounce 883, former high. But yeah, I mean, dollar NOK is just getting destroyed. So also look at this VWAP off the low, which currently is 875. Either way, can't chase the weakness here. You're in no man's land. So nice reversal here on Monday, and we followed through. I actually put that in one of my charts last night. If I could find it, hold on here. I will show you. So this is from SB Trade Desk, and we have this dollar NOK chart right here. Yeah, so you can see right there. So these little magenta bars, this is your proprietary reversal signals, and this goes back a couple of years. And you can see we've had a number of really good ones And this one indeed is proving to be pretty good as well. So there's that. Okay. Looked at the Scandies, and I said we would look at some crypto. So the question posed to me is, what is my long-term Elliott count on Ethereum? Well, if I, gun to my head, had to look at this, I would do something like this. So go back to this 2019 or 2018 low, go 1, 2, 3 up to here, up to May, all right, with 1, 2, 3, 4, 5, and everything since then is a correction or a fourth wave correction. So you would go like, A, B, C, and that would be your fourth. I'll lay it out for you here as well. Here, let me put it on this chart so that you can see what I'm thinking. And again, I'm going back to this 2018 low is kind of where I'm starting. It's just what sticks out to me. And again, I think this is true for any type of pattern analysis. You shouldn't have to sit there and come up with these crazy counts and all this stuff. It's either there or it's not. So it's like, if it screams at you and it says, here I am, you count it real easy, it's there. If you have to take a while to look at it, there's just nothing there, right? So I would go like this. Okay. And then 5 somewhere, who knows where. Let's do a little ratio analysis on this. All right, so where's the 127 to? It's going to be a lot higher, but I'm just wondering. 5109, okay. Let's say if we did simple trend line action here, hold on. So it's pretty good, actually. It's 33 degrees. Okay, we're going to go 33 on this. So you see what I've done here. These are, this is Elliott channeling, okay? So first of all, I don't know if this is the top of wave 3. This is where my head's at, because to me, this was kind of a false break, right? Reversal to the downside. And I'll zoom in and show you what I'm looking for in terms of a trade here in a little bit. But this is Elliott channeling, right? So 1, 3, extend off 2, and then that estimates the end of wave 4. So you could be talking about, close to $1,000 if this is for real. But here's what I'm looking at in terms of, and again, it could be totally wrong. This is what I'm looking at in terms of a trade. So go back to the July low, and you got this trend line here. Beautiful touches, right? All throughout September, November, right? Little volatile December price action. But that's where I'm looking at for resistance in that line, underside, which is like 45.50s, okay? So I would say if you don't if you don't back off at that level, and then you're probably going to new highs, and everything I just said is probably wrong in terms of a count. But that's what I'm thinking at the moment. All right, let's go to Bitcoin. And Bitcoin's been lagging Ethereum, actually. We had a good breakdown over the weekend, of course. We nailed this center line, which is just amazing. How we've looked at this channel a bunch, so I'm not going to go too much into it. But here, too, I would be watching for resistance at the underside of this line, right? So July, same trend line as Ethereum from July. And it's going to be a good deal higher, actually. So, with Bitcoin lagging the extent that it is, maybe we don't get there. I don't know. But yeah, that's the obvious level for resistance, and it's like 56,400 or so. There are some other really interesting crypto charts out there. One of them is Cardano, ADA USD. These things channel unbelievably. I mean, the technicals, if you will, on these cryptos are amazing, and they should be. They're amazing because there's no so-called fundamental, like it's pure supply demand, right? It's like gold. Like technicals work great on gold because it's there. There's no interest rate. There's no central bank meetings. I mean, I get it. Gold and these things move on central bank meetings, but like it's pure supply demand. That's it. So yeah, so Cardano hit that over that weekend crypto crash, nailed that support, and we've kind of been basing here a little bit. I'm thinking higher, frankly, against the low that we made today. That's kind of where my head's at. So there's a lot of room to run on the upside from here. Again, the chance, it's like the last chance long, if you will, because if you break this channel, then bye bye, and who knows if this thing even exists anymore. But yeah, from just a technical perspective, I am positive here given the channel. Solano is another interesting chart. Again, here's a daily chart. This thing is potentially extremely bearish. Okay. It's a wedge that goes back several years, and you can see the contracting trend lines, right? The latest high did not quite reach it, meaning the trend's really petering out. We broke this short-term trend line here over the weekend. If we get back to that level, it is a great candidate for resistance and a possible short, and that's going to be like 216 to 220. If we break this wedge line, then look out below, and it's heading a lot lower if we do that. So some great crypto charts, some great opportunities. Again, I don't have like a fundamental theme on being, bullish or bearish, all the crypto space or whatever, but like there are some great lines in the sand to trade around from both sides of the market in these various assets, if you will, digital assets. Okay, so it's a good time for me to let you know, if you don't already know, that we are looking for profitable traders at Scandinavian capital markets for our prop trading program. Okay, we launched a new version of the prop trading program a few weeks back. I've been talking about this a bit. You may have seen it on Twitter. You may have watched these webinars. We are funding up to $1 million for traders, okay, given, of course, that you pass the assessment. There are no fees, time constraints. It's just trade, okay, as long as you, again, pass our assessment. That's that simple. So if you want to know more about it and you want to become a money manager, start your path to becoming one, go to scandinavianmarkets.com/getfunded. All right, so check it out. Great opportunity. All right, let's take a quick look at some commodities, and then that will be a wrap. Gone through pretty much everything here. Oh, and I did want to look at Aussie yen. I'll do that before we go. Okay, so gold. After trading cryptos for a little bit, gold's getting pretty damn boring, isn't it? But we don't want to forget about it. Once everyone forgets about it, that's when gold's going to do something crazy. So always want to keep it on the radar. Anyway, we have come into a level. Last week I was talking about 1759 support. I was hoping we'd take out that low and then get the reversal. We didn't do it. So still thinking the same thing. I mean, maybe we test this low. I don't know. It's not a lot to write home about, but like 1760 plus or minus a couple bucks to me is proposed support maybe for longs. The sentiment here has gotten pretty dour, right? But the price action isn't saying we should do anything either, right? Every little rally is kind of pathetic. So yeah, I'm just hurrying up and waiting. Hurry up and wait, I like to say, for something to happen, and there's nothing that tickles my fancy in gold yet. All right, crude oil. This has been an awesome market of late. We had a gigantic reversal last week after dipping under this beautiful line, trend line off the March and August lows. At the time, I wrote we were headed back to 73, which would be resistance, and we got to 73 yesterday. The rally, to me, though, doesn't look done. So, I'd look for another poke up here. there's really nothing to do. You can't chase it here, that's for sure. You can't. Anchored VWAP from the high is going to be closer to that 76.80, excuse me, 76.80 level, which is the high from July. That might, that might ultimately be where we're headed. So again, to me, nothing to do here. The opportunity was obviously down at support, which was pointed out in my analysis when it happened. But yeah, 3 levels, right? One we're at now, 73, 75, then 77. So every $2 up, right? I'd probably be looking at shorts up here, 77, if we got there over the course of the next few weeks. All right, Aussie yen is the last one. Okay, so awesome reversal here. We've actually just took out last week's high, believe it or not. So we had a reversal. We wrote about this a couple days ago. Had a nice reversal on Monday. Took out that low, textbook, right? September 22nd low, top side of this trend line. We are getting really close to the way this thing's moving. We might be there before I finish this webinar. We are looking at 81 or 82, 82.30 for resistance, or at least pay attention to it around there. And you can see why. You know, just look at all the highs and lows within this range, right? Including the one recently on November 19th. So that's where I'd be looking for something, a reaction, if you will, right? And again, this is a great barometer for risk in general, right? Risk on, risk off, so to speak. And as we get up into this level, pay attention to it and check out your other markets like the S&P, because they might start to falter as well at that level. All right. Okie dokie. So that's it. That's it for me. So again, Jamie Saettele here. It is December 8th, 2021, and signing off for Scandinavian Capital Markets as well as SB Trade Desk. Take care. Have a great rest of your week, and I'll be back next week with more. All right, bye.